This is Conversations, a weekly financial podcast featuring interviews with leading investment strategists, noted technical analysts, and other key thought leaders. Brought to you by the Market Technicians Association.
Broadcasting from the city of London, and here today with us we have a very distinguished guest, one of the most senior technical analysts in the whole of the UK, Robin Griffiths. Robin is part of the global macro team and chief technical strategist for Echo Group, and is one of the most respected technical analysts of the world, stock markets, bond, currencies and commodities, with 48 years of investment experience. Mr. Griffiths worked at Kazanov in 2008 as a technical strategist, providing strategic input, marketing support, primarily to the private wealth management. Prior to joining Kazanov, he was chief technical analyst at HSBC for over 20 years. And prior to that, Mr. Griffiths was at WI Carr, where he became a technical analyst and developed his own trading system, analyzing stock and stock market trends. Without further ado, we'll be speaking to Robin. Robin, welcome to the show.
Thank you.
As usual, my first question is in order to get to know a bit more about the presenters here at the MTA is, would you be able to give us some information about your, for example, your educational background before getting involved with technical analysis?
Yes.
How did you start out?
Well, it was important because I originally became a mechanical engineer with Lucas, where I learned how to make machine parts, and learned regression analysis there, because you don't measure every nut and bolt that comes off a production line. You measure 1 in 1,000 and keep them within tolerances. So this process was in my mind before I even joined the city. Once I'd qualified as an engineer, I realized I didn't want to be an engineer. So I then went to university and read economics. And that led into Phillips and Drew in 1966. And they at the time had the top ranking for fundamental research. So of course you read Benjamin Graham's book and were a good fundamental analyst. And I passed through the research department onto the sales desk, so my job was to talk to institutional investors, and that I absolutely loved, and basically did that for the rest of my career. But along the way, I learned that you better, in addition to knowing which stocks were cheap or dear, fundamentally, you better know which ones are going up or down in price. And that didn't seem to be the same list of stocks at all. So that got me into technical analysis. And I took the early services, people like David Fuller's chart analysis product and investment research of Cambridge product then. Those were the only 2 companies in England at that time. And then when DataStream came out with computer-drawn charts, I really took off because I could then cover much more stuff. And for many years wrote a newsletter called The Amateur Chartist. But it was my hobby. My job was to be a partner of the firm and generate large commissions, but my hobby was to write the newsletter. But although it was called The Amateur Chartist, the buyers of the newsletter were some of the biggest names in the City of London, including the man, I won't name him, who started and owned outright one of the biggest groups of unit trusts in the country. So it was actually being read by professionals. And then many years later, when I joined James Capel, who by then they were ranked number 1 in fundamental research, they said to me, we don't want you to be a salesman, we want you to be technical analyst, because we want the Excel rating and we think you can be number 1, which I then was for several years running. And I've basically done it ever since. James Capel was owned already by HSBC, so I didn't change my job, that it just became the bank. And I stayed there until their retirement age in 2002.
So going back to your day-to-day responsibilities, could you give us a description of your typical day? I mean, and how does it start, and how do you carry out throughout the trading day?
Well, my trade now, now it's rather different because I'm no longer at the big bank. Then it was much more hectic. And they literally sent me around the world about 4 times a year, seeing institutions all over the world. Now I go to an office in Brook Street, just up the road from Claridge's, and I sit and read and look at charts all day long. But I'm still writing a newsletter with very much the same coverage. So it's all of the largest equity stock markets and the bond markets that go with that. Some commodities, but mainly gold and oil rather than general commodities. And then currency cross rates as well. The main business of the ECU group is currency trading. So the trading goes on. I put my 2 pennyworth into the mix for the trading currencies. But I'm also writing the global newsletter, which looks exactly the same as the amateur chartist used to look 40 years ago.
And okay, going back to the newsletter, your research material, could you give us a brief description of your favorite tools and techniques?
Yeah. Well, the one that got me into the business in the first place was regression analysis. You've got to remember, this is before, I think Mr. Bollinger was still in school in short trousers. But the why I used in regression analysis, because that's what I learned as an engineer running machine line. And when I originally published a chart with the trend line down the middle of the data and parallel lines that were 1 and 2 standard deviations, I suddenly got a phone call from a man called Alec Ellinger, who back then was the doyen of technical analysis. And he phoned me up and he said, this idea of putting the trend down the middle instead of on the bottoms and the tops is really cool. Come and tell us how you do it. So I went along and did that and found myself enrolled as a technical analyst, basically. And the society was then called IFTA, which was Association of Chart and Technical Analysis. But when many years later I became the chairman of it, we changed the name to Society of Technical Analysts. And so the regression analysis is what got me into it. The second thing was, I realized fairly early on you had to know where to start your regression lines from. And when I worked on that, I realized that the trends were cyclical and that the cycles that I was looking at, relatively long-term cycles, were in fact driven by the underlying economy. And then I remembered my degree course and the book by Joseph Schumpeter on business cycles. So I've spent my life saying, if those cycles in Schumpeter are correct, and there's a lot of economic data available so we know where we are in those cycles, then I can draw you a map of where we would be on the stock market. And so all my presentations are called Mapping the Markets, always have been, basically, and I just continually keep it up to date.
And if I understand, you also wrote a book called Mapping the Markets.
Absolutely, yes, which is published in the Economist magazine series, so their label is on the front of it. And that explains my full methodology. And when you come to the stocks within an individual market, of course, you get this cyclical thing, but you also get relative strength. So that's always been a part of it. The basic trend, relative strength, and a certain amount of pattern recognition. But I never force the patterns onto an unwilling chart. Either the moving averages make this shape, double top, triple top, whatever, or they don't make it. And if they don't make it, I need to know why. There's usually a reason you can find for why.
Okay, so hypothetically, if I gave you a chart of the FTSE, of the S&P 500, how would you exactly begin analyzing it?
Well, firstly, is the long-term trend up or down? And you can either use something as simple as the 200-day moving average, any index that's above its 200-day moving average, or if you're using Ichimoku charts, is it above the cloud? It's in a bull market. And it is indeed still in a bull market. However, when you then come to how long has this bull market been going on, the answer is it's on borrowed time already. Normally they end way before this one, at least a year earlier, and I'll explain that in more detail later. Secondly, what is the structure within the market? What is performing? And one of the worrying things is, and this applies to the US market as well, the great leaders of the real companies, IBM, Walmart, to name two Americans who've had figures recently, are doing terribly badly. Their prices are falling. There's been distribution going on. And what's holding the market up are the few stocks with no earnings, with names like Tesla, Netflix, etc. This is usually a very dangerous sign. It's enough to keep the index rising for a bit longer, but it's a sure sign that all other things being equal, you're near a top. The only thing that is very different this time from anything else in my previous history is we've never had quantitative easing before, which is of course designed to stop the market falling, and it can push it into a bubble and take the market to ridiculous levels if well, it's possible that it will do that. I personally don't think it will, but it's possible. But if you were just sticking to the old-fashioned technical analysis, you'd say we're still in a bull market, but we are dangerously near a high, from which quite a nasty fall could take place.
You mentioned about Schumpeter. Other than the aforementioned, which other would you characterize as your top influences? Two other authors, for example, could you name 2 or 3 names?
Yes.
Or 3 books?
Originally, when I got into technical analysis, it was point and figure charting. So the book was Edwards and McGee. That was for many years referred to as the Bible of technical analysis. But I fairly quickly preferred time series charts. And as I say, as soon as DataStream made it available on a computer, I was away. And then you wanted to know, well, how do we handle time series? So the names, the clearest description of how to use moving averages and indeed regression lines was Joe Granville.
Who passed away.
He passed away recently, but his early writings are very clear on the rules of using that. I don't think he invented them, but he described them very well. And then the variety of indicators derived from price that get into the computer systems. I think the name Wells Wilder would crop up quite a lot, but more importantly, John Murphy wrote an excellent textbook putting most of those things in there. And the other man who wrote good textbooks, and I still know, is Martin Pring. So those 2 sets of books would be vital. But the one book which is more important than all of them is a little thin book called Extraordinary Popular Delusions and the Madness of Crowds. I make that vital reading, otherwise you never understand how markets work.
Okay, from these books, or of course more importantly from your experience, if you ask to distill your knowledge in a few principles or market axioms, which ones would this be?
Well, you don't fight the prime trend, and the prime trend isn't daily bars, but if the weekly highs and lows are rising, you're in an uptrend. If you've got a cross of a short moving average above a long, or the regression line is rising, I used to measure the rate of rise of the trend line, and if that was going at more than 0.5% per week, that had real momentum, you could back it. So I would divide trends into quintiles: strong, very strong, neutral, and then weak and very weak. So it was a quintile system. But what you back, you were safest backing the very strong rather than the merely strong. And then you start to do your relative strength on individual stocks on the same basis.
Top down. If I asked you to give a call to 25-year-old Robin and give him some advice regarding markets, and having a career in the city, which one would that be?
I would urge him not to specialize in Western stock markets because they're overcovered, but depending on his language abilities, he should specialize in Asia, either Indian-related markets or Chinese-related markets, not necessarily China, because I think it's a self-evident truth that these are going to be 2 of the biggest markets on the planet. They're not yet, but they're coming. So I tell my own sons for their own pension plans, that's where you're going to be invested for your pension.
Brilliant. And fun fact, what does Robin do outside of his working hours? I know that you're a very, very keen sailor.
I have 2 passions, sailing and skiing. So I have to ski every winter or I get upset. And I sail regularly. I've just finished sailing the whole way around the world. That's likely to be a bit of a one-off, but I like to sail winter and summer otherwise for shorter distances.
If I'm not mistaken, you were also a record holder in sailing.
Yes, back in the 80s, courtesy of Sir Robin Knox-Johnson, I was able to crew for him on a catamaran called British Airways, and we raced from America to England, and at the time that was the record.
Brilliant. And on a last note, although personally I know the story about it, but would you would be kind enough to tell us about your involvement in the IFTA?
Yes. Well, back in 1988, I was at the time the chairman of the British Society of Technical Analysts, and there were only 2 other big societies in the world. The MTA was one, and then the Nippon Technical Analysts Association was the other. And there was a conference in Tokyo, which technically wasn't an IFTA conference. And what that conference decided is, should there be a body called IFTA to coordinate the global work, and also to encourage younger countries to start societies of their own. And there was a vote that indeed there should be such a society, and if there was going to be one, the first chairman would be Ralph Acampora. But how on earth was it going to pay for itself? And that's when I put my hand up and said, I will run a conference in London, and if you all come to support it, of course it'll make a profit, and I'll donate the profit to IFTA to get it cashed up. And although we're going back to 1989, in British pounds we made a profit of £30,000 in that. That's a lot of money. It may not have been equaled in more recent times, because doing better than breaking even is quite hard to do. But anyway, that was where the initial money came from to get IFTA running, and it's never looked back, really.
Brilliant. Okay. Robin, thank you very much. That's a wrap. And I'd like to thank you very much for the opportunity of this interview.
Thank you.
It will be a pleasure to watch you in the presentation about world investment strategies. This is Alex Spiroglou for the MTA Broadcasting from London. See you next time.